What's up, YouTube? It's Joe Catchpolia sitting on the couch, making some money investing in fractional real estate online, as usual. Just like I mentioned in my last couple videos, there is a new Mogul property. It should be officially launched tomorrow, but they're doing what they're calling it. They send out an email to. I don't really know how you get to be on this list. It seems like it's not literally everybody, but quite a few people seem to get these. I don't know. I didn't hear about this one from other people, but on the last one, a couple of people mentioned it to me before I had seen it. It is one thing that worries me a little bit about Mogul is that their marketing is so slick. Um, it actually, made me nervous about them initially. They do a lot of things that they're just good salespeople. They have good marketing, and so oftentimes when you see that in the real estate space, it's it's aimed at investors who aren't necessarily as savvy, and a lot of times there are deals that are just terrible returns or um, giving you metrics that don't really make a lot of sense. And they're not doing that. But it is always something that just like, puts me a little bit on alert whenever I see, them doing something. And so sometimes I worry a little bit about, how much is it working on me, the fact that they do a good job with their marketing, right? So makes me always want to be a little bit more diligent when I see stuff like that. So, just the whole concept of the VIP launch, I get it. They're like, hey, you can get in here early, you can buy some. Um, Especially because their last property sold out so quickly. I'm not nervous about this one selling out as quickly. The last one, I think they raised like around 150,000 for. This one, the total raise is going to be over 1 million. And so, I don't think they're going to raise $1 million in a day or two. So I think we have time to take our time, go through this. But it's a smart strategy, right? To just be like, hey, check this out. Our last one sold out. You get access to this one early. They don't have an analysis tab up yet, and I really want to see that on this one. I want to dig into that a little bit more. But I'll just show you what I came up with so far. Y- you know, um, I don't think there's anything in the email that's too interesting, other than when they're talking about why Austin. They only talk about the rental market, and then a little bit about demand for demand for tourism. So they're noticeably absent is anything about pricing. It is because if you look at this zip code in the last year, pricing has gone. Property values have gone down quite a bit. Um, I'm not worried about that. I've talked about before. Austin has had a couple of rough years, but I think in the long run, I think the move is back in the positive direction. I think that they're going to continue to grow. I think they just got a little bit ahead of themselves because they boomed so strongly, during that COVID period. You just had so many people moving there. But so this is the property. It's a, let's see, what is it? 5 bedroom, 3 bathroom, mid-century modern home. They mentioned it's a famous architect. Let's see, renowned Austin architect A.D. Stenger. I don't know, not somebody who I've heard of, but I'm not, really up on all the different architects out there. There's probably 10 names I'd recognize, and that's about it. Um, it's a great looking property as far as for use as Airbnb or short term rental. They have a lot of these little accent walls, and I don't know. I think it's really well done. There are it is. I mean, it's clearly an older home, right? There's not um it, so the kitchen's okay. It's not extremely updated. It's not it fits in the with the character of the home, though, I think. Um well, like, I don't know. I think that it's not like a brand new home. It has the charm of being an older home, but so you can already tell sort of the way I'm talking about this that I'm a little nervous about this property, and I'm going to jump into why. So the first thing, um, this is a market I do have MLS access for. I pulled up the last time this sold. It was less than a year ago. It was on the market for 70 days, so not a short marketing period. and it sold for $450,000 more than what we currently have it under contract for. $440,000. I mean, less than what it's currently under contract for. And looking through the pictures, that wouldn't bother me if there was a major renovation. But when I look through the pictures, they sold a home that looks very much just like the home that we have now. They did, there is clearly some renovation that was done, but I think oh, where did it go? I think it's just primarily, um, some of these accent walls that they've done, right? Like this here. Um, I don't think, this is all the same. Some of this painting on this wall, I didn't see that, right? And this accent wall here. So I mean, that's been included. They've done this here, but it doesn't. The kitchen looks the same to me. The bathrooms look exactly the same as far as I could tell. So it's not as if somebody bought it and renovated it significantly, right? Basically, they bought it, did some painting and accent walls, right? Like this bathroom, I think looks exactly the same, um, or at least very similar. Yeah, I don't think it's meaningfully different. And then, they furnished it and they mentioned, it's over $100,000 worth of furniture that they put in there. And I believe that. I mean, when some of my clients will, uh, when we've helped them get bigger properties like this prepared, it's always, over $50,000 worth of furniture, and sometimes 80 or 90 or 100. I mean, like that's very believable, right? With the quality of what they put in, I can believe that. But if you think about it, we're in a market where prices have moved down for 6% since this purchase. I just don't see how we get to the higher price. And I mean, one of the things, they just like always, they provide some comps, but like if you look at these two comps, they're significantly larger homes. I didn't pull these ones up. What I did is I looked in because I do have uh, MLS access. I just looked at this the way that I would normally look at a property here in San Antonio, right? And so the main thing that I like to do is restrict my search first to just the legal subdivision, right? And so this is the subdivision here. These are all the sales in the last 12 months in the subdivision, and so this is the property itself. That's where we get that sale. And typically, if I find enough sales that are actually in the same subdivision that I think would be a comparable property, that's the end of my search. I don't go outside of that. And one of the reasons that's the way I do this is it's what I've just seen appraisers do over and over again. It is going, theoretically, it's going to be the most similarly priced location because these were all built in the same time. Now, if I didn't have comps here, obviously I'd spread out a little bit further, but for now, that's what I'm looking at. So I mean, it doesn't give me this is the last, like I said, last 12 months. Not a whole bunch of sales, but a lot of similarly sized ones. So let's see. Let's see, where's the subject property is 2,400, square feet. It is the only 5 bedroom on this list, but it's significantly smaller than these 3,000, 3,400, 3,300. And so, typically homes aren't priced by the bedroom. The pricing varies more by square footage. And so these homes, I'd expect one, if you wanted to configure them with an additional bedroom, you probably could, right? Like, I mean, a lot of times, if you already have the square footage, creating a bedroom somewhere in a home is not that big of a deal. But so, basically to say that, I would still consider these reasonable to use these as comps, even though it's 4 bedrooms versus 5. So if I were looking at this in general, I normally wouldn't spread my search out any further, and so I just stick with this. Um, and so then when I look at these, and now I want to see, well, okay, what's the average price per square foot? What does that look like compared to ours? And so you can see this is the list of well, this is the sold prices per square foot, right? Anywhere from 508 to 873. And then the last time this home sold, it sold for 725 per square foot. And so This time though, let's see, we're at 2.2 million, and we're dividing by 2430 equals, so we're talking about $905 a square foot. It's significantly over what is the highest one already at 873, right? So we're now part of that. I think, okay, let's, because we're getting the furniture, what if we give them full credit for that, right? 21,000, or let's give them credit for 100,000 for that. I don't normally do that when I'm buying operating Airbnbs or helping clients do that because, if they had to sell it to a owner occupant and then sell that furniture, a lot of times they're getting closer to yard sale prices than to retail prices. But sometimes we have paid up, especially if the income's really there. So let's look at that. 2.1 million divided by again the 2430. Okay, that gets you to 864. That is right in the same ballpark of the 873, but let's look at that home, right? This is why I was starting to talk about, well, it doesn't, that one doesn't look incredibly updated. Like if you compare kitchens, this is a significantly, in my mind, a significantly nicer and more updated kitchen than the one that we're looking at. Um, the finishes of the home, like just the overall quality, appears superior. Now, it doesn't have the same. I still think that the Johnson 2 that we're looking at could be a better Airbnb because of the unique architecture, right? That mid-century modern architecture makes it a little bit more interesting, and sometimes that will make it perform better as a short-term rental, even if it wouldn't necessarily sell for more money. But like when we compare these two homes, I just wouldn't expect that home to sell for similarly priced square feet to this one, right? I mean, I just would expect it to be a little bit cheaper. Um, okay, let's look at the lot size. Sometimes that'll make a big difference, right? And so just so you know, I plan to make um, a more comprehensive video about this one once they have their analysis tab up and I've spent more time on it. But so far you can tell I'm a little hesitant about what we've got. Yeah, very similar lot size, right? So we're not talking about let's see, 22 or yeah, I mean it's basically the same lot size, right? Very, very similar. So that's not where the extra value is coming from. So we have a thousand extra square feet here. This is a 2018 build um, versus a 1956 build. Yes, we have the additional bath or bedroom here, but again, I mean, from a square footage perspective, like if you can't find some place to put a bedroom in 1,000 square feet that you have extra, it's just a matter of the way that it's configured, and it wouldn't, presumably take very much to do that. So I am worried that we're overpaying for this property, and this hasn't happened. Uh, I guess it's happened a few times with their properties, and some of them I was able to get comfortable with, and just thought, okay, no, I really don't, I'm okay with it because the comps that I was using weren't as great. Because this one is in a market where I do have MLS access, I feel a little bit more confident in the way that I'm looking at the value. I also did look at Zillow, and I mean Zillow gives it a lower price than the last sale, which frankly makes a lot of sense if you think about the way prices have moved in that market, right? So, um, I don't know. I'm a little bit worried, or I'm very worried with this one that we're overpaying. And my rule number one: don't lose money. The way to lose money is to overpay, right? Like, but then also to be a forced seller. Um, which is one of the reasons why I want to really understand the yield, because this is one too where when I look at Air DNA, it doesn't. Okay, so let me pull up the Air DNA now for this one. That's not it. Where are we here? Air DNA doesn't seem very comfortable or confident in their numbers, right? So it's saying 186,000 for this one. Um, I found this particular property as a comp, but it's only been operating, it appears to only have been up for 131 days. And so AirDNA just messes this up sometimes. It gives you the same annual revenue as potential revenue. Obviously, if they made 46,000 in 131 days, they're going to make more than that over the long period of time. Um, so this to me is worrisome, right? So when I see that, uh, that is not great income. But so let me go back to this. But when you look at the other comps that they pull up, in this immediate area, there weren't any that I saw that were, we had this one that was 311. This was the biggest one or the highest one that it brought up as a direct comp. And then you have this one here that's at 266. Uh, in the description though, they say they've already got, it's 300,000 in projected revenue. And they already have, I think they said more than half of that booked or with a majority already of year one already booked. So, a lot of the ones that they've bought already have had a longer period of time of actual performance to look at. So this is one of the shortest periods of time for AirDNA that I've looked at for one that they bought. It's possible that there was a different listing for this property in the past. It's not, this info isn't always perfect. I guess while we're doing this, I want to look at this one here and see, so this one is actually has 311,000 in revenue. Um, 5 bedrooms, 4 bathrooms. They're accommodating 15 guests, which the one that we were looking at is 10. And so that it leads me to believe this is going to be a significantly larger house. And it's the arcade house. I think this like really going all out with game rooms and whatnot is a very good strategy in today's world. Um, so that's one of the things that I always try to figure out. AirDNA will give you a number that it's basically, I think what it does is if you're actually in the 75th percentile, that it's estimating that you get to there. It's not the average amount, but I think that's what they do. That could have changed, so I'm not positive. But what I like to do is actually look at the comps that are out there and figure out like, okay, if we've got a professional manager, could we match what this one's doing? Um, and honestly, I think the answer is it would be very tough, right? Because it seems like we're probably smaller if they're doing 15 guests and we're only doing 10. And I know it's got the same number of bedrooms, but bedrooms are not the only limitation when it comes to short-term rentals. It's how many beds you can actually fit in the bedrooms, right? If you have larger bedrooms or if you have a bunk room. But in addition to that, you have to have enough living space to comfortably accommodate all the people who are going to stay there. You have to, plenty of places for them to all sit, plenty of places for them to eat. And so my guess is this is just a significantly larger home. It appears to be when I'm looking at the pictures. It's something that, we could probably dig in and figure out this actual address. It might take a little work. Sometimes it does. Oh yeah, I mean, they have this awesome bunk room here. This is how they're doing so many. And we've put these in a lot of the ones that we've done here in San Antonio. Um, because it is, when a lot of times if you have multiple families traveling together, they'll stick all the kids in one of these rooms, and then each one of the sets of parents will have their own room. So um, they seem to, people really enjoy them. Oh, okay, and then they have another room set up with bunk beds too. So obviously you could do that in the home that we're looking at. Oh, this is interesting. They even have a urinal. Um, but when I look at this one, I think it would be tough to hit this number, but because it is, I think with the right marketing and management, maybe you could, right? Maybe you could get close to this. They're projecting 300, which is a little below that. So I think that seems possible. Not necessarily a conservative estimate like a lot of the ones that they have had in the past. Let me look I want to see one other thing that their note said though. They're projecting 300,000 and going forward. Majority already booked. I think it must be in the email where they said that there are other ones in the neighborhood that are doing more than that already. Um, I don't know exactly where it is, but I definitely saw that it looked like they said there were ones in the neighborhood that were like between, oh yeah, between 3 and 525.9. I wish I could find this one. They might be using something different too. What is that? Nope, that's a 57. But this is something I'd want to dig around in a little bit more. Okay, but so here, let's look at this 273. What is this one? How does this one compare? Okay, it's a bedroom smaller, but they're putting 13 guests in. Oh, that's a nice looking home too. Like, I mean, this is tough competition, even though it does have one less bedroom because they are still putting more guests. Um, and it's a really nice looking home again. So, maybe we beat 276. It seems really tough. We're going to get to 311 and match that. Now, obviously, part of this comes down to also how well it's managed, and the how they manage their pricing, and how good their listing looks and everything like that. Um, but this is a tough one for me. I think that I'm going to have a hard time buying into this one unless once I dig into their analysis tab, or I really like that one, right? Like, because I like to see how they're getting to their numbers, because they did mention, um, let's see, they did mention year one. I think it's in the email again here. Uh, I really don't like when companies do this average yield. I've seen this because, like, what they're doing, they're not saying this is the yield today. This is saying, like, we're taking what whatever the future, if we have a really high yield in the future and we're averaging that, back with, every year during the hold period, and we average it, this is what it is. And I think that I'd always much rather just see, okay, what's my year one yield, right? What is my, because that's one, it's the one that's the easiest to predict. And so they have a year one yield of 9.4. I'm really happy with a 9.4% yield. I want to dig into the numbers that they have and see how they get there. Um, and and then with the IRR, how much of this is really coming from the pop on sale? It looks like a pretty decent amount. And that's where I'm just gonna, have a real hang up, right? Because if so, they don't have a huge appreciation rate, 3.25. I think over the next 5 to 7 years, that's a reasonable appreciation rate to expect. If we were starting from a price today that I think is a reasonable price, right? And so the problem is, I think we're overpaying today. At least that's my analysis so far. Obviously, I want to dig into this further. I don't think I gave the disclosure or anything today, the warning, right? Just because I do or don't buy one of these doesn't mean that you should, right? You should do your own due diligence on the property, and on the platform. Now I've bought pieces of quite a few properties on this platform now. It's one I really like. I think their average deal is a good deal, but that doesn't mean that you should do it, right? You should do your own due diligence on the platform. They are open and it will answer questions for you. You should do your own due diligence on these properties. I just like to share what I've come up with so far. Um, and again, just because I buy some of one of these doesn't mean that you should do it. And just because I decide not to buy one, which, I still haven't made a decision on this one. This is just my initial take. I haven't done, like I said, I mean, I haven't done a full due diligence. Once they have their analysis tab up, I hope to make another video, or I plan to, as long as it hasn't sold out, which, again, I don't think it will. They do have a significant amount raised already, but the goal is, a lot more, right? Over $1 million. And, part of, we learned this on the webinar, is that when they have, this is somebody invested a large amount up front to be able to have naming rights on this one, right? So, um, I don't know. So anyway, I think that it's going to be tough for me to want to do this one because I do feel like we're overpaying a little bit. Um, but at the same time, like, if we're getting a 9.4% yield going into a property like this, if this is no growth, but I'm curious how they say this is no growth, right? Like I'm I don't know where we don't have a full year history where or at least AirDNA is not pulling a full year history. And it seems unlikely that they do actually have a full year because remember, this sale happened, less than a year ago. And then they had to spend some time. Well, this was the list date, right? Actual contract date and off market date. And then where is their, when I see this whole date? So we got it down. Let me have client friendly version. So I'm using this version because I'm sharing this online. But it makes it so it's not set up the way I have my default when I'm looking at it. Yeah, so I mean, it closed like much less than a year ago. Then they had to paint their accent walls, they had to furnish it, they had to get it up and running. So it's very unlikely that they actually have a whole year. Well, I mean, it seems impossible to me that they have a whole year. So when they're saying free growth, I'm really curious how that works, right? I mean, are they just annualizing what they have already? You could do that if this were a long-term rental, but you certainly can't do that for a short-term rental, right? Because it's seasonal, even though Austin isn't the most seasonal market. It's not like it's a ski market or something, or a beach market. Both of those tend to have like 2 or 3 months or 4 months that where you make all the money, and then the rest of it, it's not like we have that issue here. But at the same time, it's tough to say, well, we have, they're saying pre-growth, but like that to me would imply that you had some actuals that you're saying like, oh, we're just going to do the same as last year, but we just don't have all of last year. Maybe though that's part of this isn't supposed to close until July. Um, Maybe that's part of why, because they want to have a full year. Oh, that's interesting. So I'm not sure. I'm not sure what's going on there. I think I'm probably going to try to ask a couple questions about it. I do think it's going to be a while before it sells out. One, it does have a longer, um, a longer escrow period than some of these do. But and so that's one thing that I think we should be a little bit strategic about. And I don't know that I've ever talked about this, but for ones that aren't going to close for a while, if I put my money in today, or if I put my money in a month from now, I'm gonna, I'm getting a slightly better return on the money that I put in a month from now. Um, because either both of those investments, I'm still going to get my first dividend after the first month that it's after it's closed and up in operation. So especially if it's not selling out quickly, like if it because it's a large raise, if there's time, if I decided to buy into this, I might wait until it's closer to full and then go ahead and do it then. Obviously, if you do that, you could end up missing out on some. And I have to do a little math around like, am I really, that yield in the first month or two, but not getting that, excuse me. How much is it really impacting my overall return? I mean, my guess is it's not a very strong impact, but it might be. I think it would be worth it to game the system a little bit, but maybe not so much that I'd like risk missing deals by doing it. So, obviously where we have seen some sell out incredibly quickly, if it's a deal I'm real excited about, I'm just buying some right away. Um, but if it's a deal where I'm on the fence and like right now, I'm leaning towards not buying this one. But we'll see, when they come out with the analysis tab and I'm gonna ask some questions. And a lot of times, most of the time when I've asked them questions, hey, like why are we doing this? What are you doing? I also want to look, I'll spend some time digging into comps a little bit more and to see like are there so I think one thing that's possible is that this style of home, I can find more similar comps to this, so I'm not comparing it to that 2018 build. And it's possible that even though this is an older home, that there are certain people that would be willing to pay more for this than for the new build. It's certainly not me, right? Like I would take the new build every day of the week, especially as an investor, unless there were, because I say that because of like CapEx and whatnot, but at the same time, unless I think that having this sort of cute or interesting architecture is going to give me, a better yield on the short-term rental side, which I think is possible. I mean, there's definitely a subset of people out there that want to stay in this more than they want to stay in this sort of more plain vanilla, although very nice, brand new construction type of property. So that's all I've really got about this one for today. If you have specific questions, I am going to be reaching out to them and try to get some questions. So if there's are specific questions you'd like me to ask when I do that, I'm happy to. At the same time, I encourage you all, if you're already investing. Oh, I don't think I said this. If you're not investing on Mogul yet, I do have a link in the description to this video where they have a referral link and you can get some free money if you use that link. Uh, and they also send me money. It's an affiliate link if you do. But again, do your own due diligence, right? Don't just do it because I'm buying from there. You really want to look into the site, make sure you're comfortable with it, look into the property, make sure you're comfortable with that. But so yeah, that's in the description to this video. Um, what made me think of that? But so if you are already investing though, you probably have a rep that like is actually talk to you. I guess if you have when if when you do their questionnaire, if you say you have a certain amount to invest, they ask you to have a phone call with them. If you use a smaller amount, they don't. That's a little information somebody shared with me. So if you don't want to have to do the call, just pick a real small amount that you want to invest, and maybe you won't have to do that. But I actually have enjoyed talking to everybody that I've talked to there, and I just know, fractional real estate is real estate for introverts. So, some of us just would prefer not to, but I actually do enjoy talking to real estate to anyone who will listen. Um, so yeah, I'd encourage you to talk, reach out to them, ask your questions directly. But if you're not going to do that and there are questions, let me know because I am going to reach out to, the person I talk to regularly there and see if I can get some questions answered. The biggest ones for me, and maybe I'm going to look at these comps. These are not in the same subdivision. They are significantly larger, but they are also much more recent. Oh, well, they're not that much more recent than the ones that I'm looking at. So, like I said, I've got to spend some time with that and figure out, is my initial search of comps, am I a little bit off? Because, to be perfectly frank about it, I'd be surprised if they're really that far off, if they're overpaying that much, because so far whenever I have, dug into their deals, it seems like they really have a good sense of what they're doing as far as pricing goes. And there have been some where I've questioned, are we paying a little bit too much? But then, after really looking at their comps, I felt better about it. So I think it's possible that that's going to happen here. I just wanted to put out this info, right away because it is, because they have been selling out, pretty quickly, and so I was excited to share this. I think this will be live probably. Well, if you're probably watching this after it's live. I don't know. I'm recording this Saturday night, and it should be up sometime Sunday. Hopefully, that means the analysis tab will be up too. So dig into that and see what some of those other assumptions are. Um, Unfortunately, I really like when they have the like full year or a couple years of actuals that they can be like, hey, we're underwriting to that, but I don't know. I'm going to ask that and see, what when they say like no growth, where what are the numbers that they're using? Are they just using the half year or 9 months or whatever they have, or is it something else? Anyway, that is all I'm going to say about that for today. Please like and subscribe. Tickle the like button. Whatever that sort of thing goes. You can tell I've been watching my videos about becoming a YouTuber, right? So trying to make these a little bit more useful, but also more like what you should be seeing on here. But okay, now I'm really sorry. I'm just sorry about the rambling. In any case, until next time, I'm going to keep making mistakes so that you don't have to.